VICI Properties stock, ticker symbol VICI. This stock is down 4% year to date and has gone up and down quite a bit so far. On the 26th of July, VICI presented quarter results where they beat on FFO and revenue. Analysts think they will beat on the next earnings as well. Most people love VICI stock because of the dividend, and I understand why, with dividend yield at 5.17% and dividend compound annual growth rate at almost 30%. So could this be the perfect moment to buy VICI stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does VICI do? VICI owns one of the largest portfolios of market-leading gaming, hospitality and entertainment destinations, including Caesars Palace, Las Vegas, MGM Grand and the Venetian Resort Las Vegas, three of the most iconic entertainment facilities on the Las Vegas Strip. VICI Properties' geographically diverse portfolio consists of 50 gaming facilities across the United States and Canada. If we dive in the most recent earnings results, we see that total revenue increased 35% year over year, which is looking really good. Net income increased 619 million from minus 57 million, and EPS increased to $0.69 per share from minus $0.06. This has to do with the lockdown restrictions and all the recovery time, of course. AFFO increased 25%, which is a very important number to me. AFFO per share increased almost 12% to $0.54. With dividends sitting at $0.39, we see that they are covered very well. Another important note is that FFO and FFO per share loss in Q2 2022 was primarily related to the increase in the CECL allowance. VICI also updated the AFFO guidance for the full year of 2023 to roughly 2.1 billion or $2.11 to $2.14 per share. When we check the revenue breakdown, we see that Caesars is by far the biggest segment. MGM also represents a big portion of the revenue together with the Venetian Resort. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. VICI is a 30 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 14, indicating that they might be undervalued. Later in this video I will show you my 3 price targets for VICI stock. So make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 3.3 billion and in this graph we see that revenue went up nice and steady. The lockdown period had a big impact on the revenue growth and right now things are picking up some pace. Over a longer period of time margins are going up and down quite a bit. Right now it is increasing again, which is something that I really like. EPS is following the same pattern as the margin, so I will prefer a bit more steadier pattern here. Analysts expect 2023 to be a great year in terms of growth. After that, EPS is slowing down a bit and is expected to grow at low single digits. For the revenue, it is a pretty similar pattern with high growth in 2023, and after that things will slow down. Return on assets is sitting at 2.2%, which is a low number. Return on equity looks good, and the most important number, return on invested capital, is sitting at 4.4%, which is a low number, but it is higher than the 5-year average, so that's the good part here. Current ratio is at 4.4, which is looking pretty interesting. It is going down in the past couple of years, but I prefer a number between 2 and 4 with this company. Right now VICI has 17 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. VICI has 740 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like, obviously. So it's very important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, even at a steady and consistent pace. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.17%, which is a great number. Annual payout is at $1.56 and payout ratio is at 65%, which is below the average for REITs, so to me this looks pretty good. The 5-year growth rate is at almost 30%, which is an insane number, and one of the reasons why people love this stock so much. They increased the dividend for 5 years in a row, so I'm not sure why it says 0 years right here. And if you take a look at these numbers, the dividends paid since 2018, you see that VICI really likes to increase the dividends, which is very nice. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at slightly lower numbers. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare VICI stock with the overall market, in this case the S&P 500. On the 5-year chart we see that VICI beats the S&P 500 big time, with almost twice the return. And this number is including dividends. On the 1-year chart it looks pretty different, with the S&P 500 returning 7% versus VICI returning minus 5%. On the 6-month chart it is the S&P 500 with the highest return, 10% in total, beating VICI that only returned minus 7%. On the 1-month chart it is again the S&P 500 with the highest return, but both are at a negative number, which is very interesting. So bottom line, VICI stock beats the S&P 500 big time in the long run. But most recently it is looking pretty interesting with lower return versus the S&P 500. So could this be the perfect time to buy VICI stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 6 and 8% based on historical performance, their own outlook, but also because of the analysts. For the profit margin I'm filling in 63, 65 and 67%. For the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio and the price to free cash flow I'm putting in 16, 17 and 18. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now VICI stock is at $30. I hit analyze and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $22, which is a big drop from the current stock price. We have a mid-price target of $27, which is still a small drop from the current stock price, and we have a high price target of $34. To me, the mid-price target is the most justified here, indicating that this stock is still overvalued right now. My final conclusion on this stock is that it had some great returns in the past years and dividend yield is at an insane good number. But right now the valuation doesn't seem to be that interesting to me. They have some kind of a moat with the Vegas Strip, but I would love to see a bit more diversification. I must admit that the stock did impress or maybe even surprise me with the returns and revenue growth. But still, I'm waiting for lower prices. In the meantime, I'm looking at other stocks and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.